Hi, I'm Jess. On my way to work. Work is FSY Taylor, a group of companies that makes investing in property easy for clients who haven't got the time, the skill or the inclination. And I've got an early start today because I've got a couple of meetings to get to. But today's question is, capital or rent? What makes more? And the answer as usual, it depends. It depends on what you buy, where you buy it, what it rents for, of course. Most importantly, it depends on how long you keep it. Because all things being equal, we've got to talk about averages here. Capital growth will make you more money than the rental income, particularly if you keep the property for more than the medium term, medium to the long term. I've actually got a calculator that works this out. It's a very simple calculator. You plug in all the figures and it will tell you exactly the figures. You plug in what you paid for it, what you expect the growth to be, and they've got some charts to look at for there, what you expect the rental to be, and it will tell you what you will make, what you expect the costs to be, because obviously that's a factor as well. And it will tell you what I'm going to make over the 10, 15, 20 year period on my rent, and over the same period capital growth. I can tell you, all things being equal, we're going to talk about averages if I'm not got a two-way conversation here. Capital growth will make you more money than the rent by a country mile. And I say only looking at averages. We're professional property investors. We should do better than the average. So I think I can say it with a certain degree of certainty. Setting up a buy-to-let is a little bit like setting up a company, a small company. You've got to invest up front. That's the way we view it. We buy a house cheap and we add value, and we're setting up our core foundation for the business, which is we haven't paid quite as much money for the property as it's worth. We've added value and we've put it in the right place so that the net income is correct. So we get all those things right. However, unlike setting up a business, where quite often the cost of the business for the first couple of years at the least, the stuff in there will depreciate. You might be making an income every month equal to the rent, but the actual stuff in the business is going to go down. I remember we used to run sandwich and coffee shops, and we put a £25,000 cold room in the back of one of these shops. The next day, the day we switch it on, the day that the shop's open, it's absolutely worthless. In fact, actually, I'd have to pay somebody to take it out. With a house, the money you've just put into it is going up in value. It's great. It's quite unique, in fact. So we look at house prices in the UK. On average, house prices in the UK since Sensible Records began in sort of the 50s-ish have gone up year on year by, on average, about 7%. Some people will take me to task with that figure. Some people will say, oh, it's a little bit less. Some people will say it's a little bit more. The ONS, Office of National Statistics, think it's about 7 and a bit percent. So, I'll go with that. Magic thing happens at 7 and a bit percent, 7.2, 7.4%. I forget the exact figure. I suppose when you get the point, the percentage, it's not totally relevant. At 7 and a bit percent, annualised year on year, property prices double every 10 years. And for me, that's quite a magic thing, because what it means, if you bought a house for £100,000, in 10 years' time it's worth £200,000, which may or may not be more than the rent that you've just enjoyed on that same property. But if you take that out to the next 20 years and 30 years, your £100,000 house becomes £200,000, becomes £400,000, becomes £800,000, and that's when it really starts to rocket away. And that's what I mean about it depends on how long you keep it. If you understand that property investment is a long-term investment and you keep your properties for the long term, and we like to build relationships with clients that last 20, 30, 40 years, or are going to. We haven't been going that long yet, but we know that we've got to do a good, reliable job on finding these properties in the right areas at the right prices and renting them out for the right amount of money to make a nice solid investment for our clients. And if we manage that, we will enjoy, us and the client, a long and fruitful relationship. As soon as I say we can buy a house for £60,000 and it's going to double in value in 10 years, I get that sceptical look. So, yeah, but it's a cheap house. Will you really ever get the capital growth? am I better staying off in London and sticking with the capital growth, you know, that's been happening there? Well, that's happening slightly less now, because, you know, capital growth in London is waning, definitely, and in the capital city generally. But the answer is yes and more. Not only is the pay to play so much lower. I mean, a £50,000 house, if I got the choice of buying a £500,000 house and expecting it to go to £1 million, or buying a £50,000 and expecting to go to £100,000, I know that the vast majority of the UK is able to afford £100,000 on average earnings, and not many people are able to afford a £500,000 house, and that's why a £50,000 and quite easily go to £100,000, and it can certainly do that a lot quicker than a £500,000 house can go to £1 million, and that's an absolute fact. I've seen it over and over again. If you want to delve into this answer a little bit more, come and see us. Or perhaps, yeah, we've got this calculator. Send us your email, we'll send the calculator back. But if you want to find out more and more, come and see one of our Discovery Days, where we'll answer all these questions. I can show you houses that I have bought 4, 5, 6, 7 years ago for £50,000 and now worth £100,000. I've got the statement when I bought them, and I've got the completion statement when I refinanced them. There's the evidence, and it happens, and it will continue happening. Interestingly, obviously now it's happened in the areas where we've bought those things. So £50,000 house becomes a £100,000 house. We would now struggle to pay £100,000 for that. It might give you £75,000, £80,000 for the same house today, and still consider that a discount. But not many people are selling us those houses at those prices. So we've had to look for new areas, and I did a video last week saying we've got a new series of areas where it's still possible to buy a house for 50, 60, 70,000 pounds. We can feel the ripple effect going out. In Derby and Nottingham, it's no longer possible to buy it for those numbers. You travel 20, 30 miles radius around the cities, and it is possible to pick it up. So if you're interested in finding out more about those kind of houses, perhaps putting some of those properties in your own portfolio, come along to one of our Discovery Days, and again, we can show you all. So I'm sure the guys will have put plenty of little things to click and enter your details on. Do that. I look forward to seeing you in one of our Discovery Days. Thanks for watching.